Hello to the amazing prime risk community. Are you ready to get your hands on a secret weapon for scalping? Today, I'm introducing indicators that are not only perfect for low time frames like 5 and 15 minutes, but with the optimized settings I'll share, can help you achieve a win rate of over 75%. That's a golden tool for both beginner and professional traders. But this is just the beginning, because we're going to use a special technique to minimize false signals and maximize your trading efficiency to the fullest. So, if you're ready for a game-changing shift in your trades, stick with me from this moment to the end. You're about to be amazed. Now, let's dive into the charts and let the magic begin. Most traders are very interested in scalping, but the problem is that most of them can't achieve consistent profitability. Trading on lower time frames requires a high level of skill and experience. However, if you're interested in trading on lower time frames despite the difficulties of scalping, today Prime Risk has a special indicator for you that you can use on time frames like 5-minute and 15-minute. Let's go to the TradingView website. From the Indicators section, we search for Twin Range Filter, Collins version, and add it to our chart. For the second indicator, we search for Market Bias by Professor and add it to the chart. Now we have two indicators that help us identify the trend and entry points, but we need to optimize their settings. We go into the settings of the Twin Range Filter indicator. We set the source to close. Then, for the fast period, we put the number at 21. For the fast range, we set it to 3.1, and the last two sections, slow period and slow range, both should be set to 10. Now we click OK, and the indicator is in its most optimized state. We can now use it for entry points. If you've liked the video so far, your like is really valuable to us. Entry points. As you can see, since this indicator marks entry points and signals, we can know where to buy or sell. For example, here it gave us a buy signal, and we could have entered a buy position and made that profit. A little later, it gave us a sell signal, and we could have entered a sell position and made that attractive profit. But wait, if we just entered a trade every time it gave us a buy or sell signal, our account would definitely go into loss. So, we need to add another filter to effectively identify false signals. That's exactly why we added the market bias indicator. This indicator can help us with the direction of the trend and give us confirmation. Whenever the twin range indicator gives a buy or sell signal, it must be in line with the market bias indicator. How do we check this? For example, here the indicator first gives us a buy signal. Now we look at the market bias. If the buy signal is above the market bias indicator and the market bias color has turned green, we can accept the buy signal and enter the trade. On the other hand, when the twin range indicator gives a sell signal, this signal must be below the market bias indicator, and the market bias color should have turned red for us to enter a sell position. The combination of these two indicators and the additional filters will minimize false signals as much as possible. Let's look at a few more examples. Here, the indicator gave us a sell signal. So far, so good. Now we check market bias. When we look at market bias, both the color is green and the signal is lower. So we understand that we shouldn't enter a sell position here. As we can see, the price then moved up, and we would have hit our stop loss if we had entered the trade. Here, the twin range indicator gave us a buy signal. We check whether it is above the market bias indicator and whether the color has turned green. Yes, it is both above the indicator and the color has changed to green. So here we can enter a buy position on the close. We can place our stop loss behind one or two previous candles or behind the last low for a safe area. For the take profit, we can set it 1.5 to 2 times the stop loss distance. As we can see, our target was beautifully hit. In this example, the indicator gave us a buy signal. Now we need to check if the confirmations are suitable for entry. The signal is above the market bias indicator, and the indicator color has turned green. So we can enter the buy position right here and place the stop loss behind the previous low. However, the price reverses and our stop loss is hit. Why? Because there is no indicator or strategy in the world that guarantees every signal will close in profit. There is no such thing as a 100% win rate. Therefore, we must always be ready for our stop loss to be hit. But with the filters we've added, we can minimize these wrong signals from the indicator and improve our efficiency. This indicator is extremely powerful, especially with the settings provided, but you should backtest it thoroughly. I work with it on the 15-minute time frame on gold. You can also practice well first and then use it to see its amazing results. If you want to get familiar with more amazing strategies, you can check out these 2 videos that have appeared on the screen. Don't forget to subscribe to our channel to stay updated on our new videos. We'll see you soon.